Three brothers from Texas became so powerful that they held one-third of the world's available silver and nearly controlled the global silver market, which made the silver prices surge over 700% in just 9 months, triggering a worldwide frenzy, terrifying the regulators and ultimately leading to one of the most dramatic financial collapses ever recorded in history. Harrelson Hunt was one of America's richest oil tycoons. His three sons were Nelson Bunker Hunt, William Herbert Hunt, and Lamar Hunt. During the late 1970s, inflation was running high. The US dollar was falling. Many investors feared that paper money was becoming less reliable. The Hunt brothers wanted to protect their wealth. After studying different assets, they chose silver. Globally, silver was used in electronics, jewelry, photography, various industrial applications. But that's not the reason why the Hunt brothers chose silver, but there was one thing that made silver stand out. The annual demand for silver was around 800 million ounces, but the annual supply was around 650 million ounces. The world was already short of 150 million ounces of silver, which meant only one thing: silver was in huge demand. To the Hunt brothers, this looked like an opportunity of a lifetime. But there was one problem. Even billionaires couldn't easily buy huge quantities of silver back then. But the Hunt brothers were able to hold 200 million ounces of silver with them. How the Hunt brothers did something that even multi-billionaires couldn't do. They turned to something called leverage. To understand what happens next, we first need to understand how the futures market works. In stock market, a futures contract allows someone to buy or sell a large quantity of a commodity by paying only a small percentage of its value upfront. The upfront payment is called the margin. For instance, if you wanted to trade $100 worth of silver, you would only need to pay around $10 or $20 as margin, similar to how the leverage works in today's stock markets. The commodity futures market works on a 1-month validity cycle. That means at the end of each month, traders have two choices: either sell their futures contract before they expire or pay the remaining balance, that is the remaining 90%, and take delivery of the physical silver commodity itself. The Hunt brothers chose the second option. At the end of every month, when their futures contracts approached expiration, they refused to sell them. Instead, they paid the remaining balance and demanded physical delivery of the silver. Real silver bars. Truckloads of them. The silver was transported into vaults and storage facilities under their control. Then came the genius and the most dangerous part of this strategy. Once they owned the physical silver, they used it as collateral. They went to the banks, pledged their silver holdings in exchange for loans, and the banks were very happy to lend because silver prices were rising rapidly and the metal itself served as a security. So the Hunt brothers then took that borrowed money and used it to buy even more silver futures contracts. When those new futures contracts expired, they again demanded physical delivery of silver. Then they pledged that newly acquired silver to secure even larger loans. And with those larger loans, they bought even more silver. Month after month, they repeated the same cycle. Buy futures, take delivery, pledge silver, borrow money, then more delivery again, and over and over and over again, this strategy became a powerful financial loop. Each month, they accumulated more silver. Each month, they increased their borrowing capacity, and each month, more silver disappeared from the market. For 9 consecutive months, they continued this aggressive buying spree. The market was already facing a shortage of roughly 150 million ounces annually. Then the Hunt brothers came in and they accumulated nearly 200 million ounces through their physical holdings and the future positions. This effectively removed a total of 350 million ounces of silver from circulation. The shortage became far more worse. Manufacturers struggled to secure supplies. Investors rushed into the market. Speculators saw the prices rising and they wanted a piece of the action too. The entire market began to panic. Before the Hunt brothers came into the silver futures market, silver traded at around $6 per ounce. But by the end of the same year, within just 9 months, it had surged above $32 per ounce. The frenzy was becoming global. Retail investors, jewelers, ordinary consumers rushed to buy silver, believing it would likely continue to go higher. It became a full-blown silver mania, and the Hunt brothers were at the center of it all. As the silver prices soared, the impact rippled through the entire economy. Consumers and retailers were forced to pay high prices for jewelry decorative items, and industrial products that relied heavily on silver. But the real crisis was that no one still wanted to sell. Recognizing the seriousness of the situation, the Commodity Futures Commission, that is the COMEX, decided to intervene. In early January 1980, they introduced a new set of emergency regulations known as the Silver 7 Rules, meant to cool down the overheated market and restore balance. So the rule number 1 was traders could now convert only 500 silver futures contract into physical silver every month. Anything beyond that had to be sold back into the market, forcing more silver supply into circulation. Rule number 2, the margin requirement for silver futures was raised from 10% to 14%. That means every trader holding silver futures contracts now had to pay an additional 4% to maintain their positions. For small investors and retailers, this was a heavy blow. Many were forced to sell off part of their holdings, giving the market a brief moment to breathe. But for giants like Hunt Brothers, this new rule was only a minor hurdle. With deep pockets and vast silver reserves, they continued their aggressive buying strategy, determined to keep control of the market no matter the cost. In spite of the new regulations, by the end of January 1980, silver prices hit an astonishing $50 per ounce, the highest level ever recorded in history. The market was in chaos and the COMEX had to act fast. They introduced another drastic rule. From now on, traders could only sell and not buy any new contracts. But even that didn't work. Most traders still refused to sell, believing the price would rise again. Silver remained frozen at its peak. Then the exchange made its most shocking move yet. Overnight, they raised the margin requirement from 14% to a staggering 40%. The impact was immediate and devastating. The Hunt brothers were heavily leveraged. Their empire had been built on borrowed money. As long as the silver prices rose, the strategy worked perfectly. But when prices stopped rising, the entire structure became vulnerable. Banks began demanding additional collateral. The brothers needed huge amounts of cash just to maintain their positions. They were holding nearly $110 million worth of silver in futures contracts alone. And to maintain their positions, they were forced to borrow heavily from banks just to sell. Meanwhile, small investors were already being forced to sell. The market became flooded with silver. Prices started falling. Then more investors sold, which pushed the prices even lower. That triggered even more selling. A vicious chain reaction had just begun. The same leverage that helped drive prices upward now accelerated the collapse. The silver squeeze was over, and the crash had just begun. Within weeks, silver plunged from nearly $50 per ounce to around $6 per ounce. Billions of dollars evaporated. Thousands of investors suffered devastating losses. The Hunt brothers themselves lost an estimated $1.7 billion. One of the largest fortunes in America was shattered into pieces. Unable to meet their financial obligations, they eventually faced bankruptcy. The day the market crashed went down in history as Silver Thursday. This was the silver crash of 1980. It remains one of the most famous commodity crashes ever recorded in history. What makes this story so remarkable isn't just that these silver prices soared, it's that these two individuals came astonishingly close to control an entire global silver market. And that is also the reason why this is one of the most fascinating cautionary tales in financial history. A story of ambition, a story of greed, and the story of how two men nearly took control of the world's silver supply. So what do you guys think? Were the Hunt brothers financial geniuses who spotted an opportunity before everyone else? Or were they simply trying to manipulate the market? Let us know your thoughts in the comments below. And if you enjoyed this video and enjoyed the story, then there is a lot more coming up, so subscribe and check out our channel for more fascinating stories.